The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. Andrew, you're not on the promo. You're playing the special guest of either Nadine or Danny today, but great to have you.
It's a bit unusual here. I'm at the beginning of the day, now I'm here at the end of the day. So I'm bookending Thursday, as it turns out.
Mind you up, you're still working.
That's not a bad thing. Because we take a look at the market, and it's been a positive day.
Yeah, absolutely.
From what we've seen, which was, I wasn't expecting that this morning when I came in because SPI futures were down. We did see a fairly flat market globally overnight, but you take a look there and we'll take that because up 0.6% on the CBOE Australia 200
yeah,
index.
and kind of closing towards the highs of the day too, and really hard to find some laggards. You're looking at some really positive moves from the likes of Fortescue, the banks, the energy space as well. But of course it was really a day where we had the jobs number, and it's always such a volatile series, but I think it surprised a lot in the market that nearly 65,000 jobs were created in the market.
Although 95% of those were part-time. So I guess if you read through those figures, from what I've seen from the economists that have certainly tweeted and released some reaction to that, they say, look, they're still expecting the Reserve Bank will stay on hold, that it's not really going to shift the dial.
Although there was a guest earlier that said, and this is the problem at the end of the day, isn't it, where they're going into each other a little bit. There was a out of consensus call for 2 more rate hikes by the end of the year, despite that 3.7% job market. But of course, as you say, it is a very tight market there, and it came on the back of what we saw with the US inflation figure too.
Well, and that being driven by energy prices, oil up around 10%, those prices in the States, which really drove inflation higher there. We're seeing that here as well, the inflationary effect of those energy prices. Interestingly too, also I saw today, Juliet, as well, iron ore futures, probably explaining why
Fortescue is going so high.
Yeah, and those other iron ore miners have done well today, up at $120 a tonne.
Wow.
Once again, I mean, no one was really forecasting where this was going either because of that weakness we're seeing in China at the moment.
Yeah, and there was a call, I think Goldman Sachs just less than a month ago saying they actually thought that you might see a bear market for iron ore. So it's really interesting to see that ratchet higher that is certainly propelling the iron ore miners. Speaking of propelling, Myer sales soaring, and they were actually at their highest level since 2005. We love a bit of a retail story, what it's telling us about the consumer, particularly amidst what we're seeing in terms of wages pressure and the jobs market. Are we continuing to spend? Well, certainly at least there was some upside for Myer.
Although the company warning about headwinds, particularly given the weakness in the economy, and we're seeing that with discretionary spending. So that's obviously a warning sign for, well, not just Myer, but we're seeing that with those retailers across the board. Yeah,
let's have a look at sectors. We mentioned some of the moves in mining players, and it certainly was a positive session for most of them. South 32, they're trading ex-div, so that's why it's weaker. And then, of course, that ratchet higher in iron ore, certainly seeing Fortescue looking a very attractive, above $20 a barrel. And NAB leaving Hong Kong, trying to work out when we look at the banking space what that means for the China picture, pulling out, but then also saying, look, it actually sees its more, I guess, customer hub preferred base in the likes of Tokyo and Singapore.
Well, and we'll look at the share price there, amongst the highest. I guess also you look at the market, investors looking for companies to be cutting costs in this current environment. So that's clearly what NAB's doing right now.
Okay, let's get to the retailers. We mentioned what we saw with Myer, but having a look at some of the others, a bit of a mixed picture there. Harvey Norman was down by around 0.5%. Wesfarmers off slightly. Let's have a look at what else we saw in the retail space. Lovisa, unchanged. Nick Scali there up by about 0.7%. And of course, there were some ex-div stocks as well. Not as many as what we had seen in the earlier part of.
Well, I think it's going to ramp up next week, and then the week after that, I think we're going to get the most. In fact, just in terms of
the last week of September.
The value there. Yeah. So let's take a look at those ones that went ex-div today. See how they did perform. Look, obviously we normally expect them to drop, and that was certainly the case with Austal. Seven Group, the outlier there, did manage in the green, but pretty much flat for Seven, while the others obviously fell away.
All right, so we also had some broker moves out today. We had analysts at Morningstar maintaining their fair value estimate of 310 for Mirvac Group. They see a reasonable annual sales volume for Mirvac's 10-year forecast period. They're upbeat on the group's retail and industry property portfolios. Mirvac Group has risen around 7.5% this year.
All right, meanwhile, Citi has upgraded Baby Bunting to buy from neutral with a price target of $2.20 a share. The analysts seeing a better than expected trading update for the baby goods retailer as a potential catalyst to move the stock higher. Citi expecting the company's like-for-like sales to improve in the first 6 weeks of this financial year, and Baby Bunting has shed close to 30% of its share value over that time.
And Morningstar saying CSR outperforming the broader market with its total returns to shareholders from the start of the new financial year, reaching almost 30% of its profitability. Morningstar saying CSR has provided robust earnings despite cyclical headwinds in the housing sector. The analysts maintaining their fair value estimate of $5.50 a share. And the stock of the day today
was Myer, which we have spoken about.
Let's.
It was a really mixed result for Myer today. But again, on the outlook front, we want to see retailers who have some sort of certainty, and Myer definitely didn't provide that today. So I've gone with a hold because it is a strong company and it has a proven track record over history in Australia. It's a strong defensive retailer in the long term. But yeah, at the moment it's a hold rating just because they're cautious on it.
In this case, you'd rather follow the smart money here with Solomon Lew. Obviously knows the sector quite well if you want exposure to that sector. Follow his trades, and what he's looking to do is accumulate a portion of Myer, but also he's looking to spin off his other high growth assets as well. So I think actually picking up PMV is a better way to play getting exposure to Myer. From a risk point of view, you obviously got more diversification there to that one company, but also I think it does have more upside with that potential demergers.
So there we go, that's the view of Joshua Barker from Macro and Grady Wolf there from Bell Direct, their view of Myer. I mean, obviously, Juliet, a really difficult space, retailers. Pretty mixed though, because a lot of the analysts I've been speaking to recently have, again, it's another one of those sectors that surprised them. Some of the resilience we're seeing, particularly, I guess, in those more blue chip stocks, the likes of Harvey Norman, JB Hi-Fi, Wesfarmers.
How much of that peters out though when potentially some of the savings people have hoarded from COVID when we weren't spending peters out because of the higher living costs of rents rising, electricity and energy prices rising too? Because I think there has been some interesting anecdotal evidence that we still had savings and a lot of people are still kind of living off those, but when they dry out due to the higher costs, higher rates, that's when you start to see the concern.
Well, in fact, we're seeing those savings rates now being eroded quite rapidly, not surprising given cost of living and where those interest rates are at the moment. So yeah, that, and as Myers pointed it out too, in terms of its guidance there of those headwinds, that discretionary spend. I don't know about you, but so my family, I'm saying to the kids, stop spending money on clothes.
Well, I've been the biggest contributor to the economy because I've just moved back from overseas and, living, as you would know, when you've been abroad, you rent an apartment in Asia, you get all your white goods included in your rent. You come back here, I'm like, oh gosh, I have to buy a fridge, a washing machine. What else did I have to buy? A dryer, a heater, all of these things.
Well, we know why Hi-Fi and the likes have done well.
It's all me. And my savings definitely eroding too. All right, let's have a look at the market leaders and laggards. Okay, let's have a look at some of the leaders and laggards in the session in terms of what we've been seeing on the upside. Fortescue Metals Group, we're talking about there, very much impacted by that higher iron ore price, a gain of 4.4%, $20.46. Look, it's interesting with Fortescue because, it had been sort of trying to hold above that $20 level and then it had been pushed down and didn't seem to be able to break through. Is the next kind of resistance for Fortescue maybe back to that $21, $22 level, particularly particularly if, as you say, we've been seeing that ratchet higher in iron ore, 120 a tonne.
Well, and that is reflected by that top five there with Coronado, Fortescue, Champion, all in that iron ore space, so doing very well today. Also, interestingly, you see Paladin there, the uranium miners doing very well today. That's on speculation. I think there was a note out today. I was trying to remember from where that's come from, but just in terms of what is forecast for the next, or till the end of this decade, in terms of demand for uranium. We're seeing this at a political level too in many countries where they're now, as part of that energy transition, that the nuclear energy is very much a part of that mix now.
Yeah, all right, let's get now to the laggards, the stocks that were under pressure today. A couple of those, I think, were ex-div as well. Spark New Zealand was off by around 4%, Fletcher Building down by about 4.9%. Hard to really draw a common thread with a lot of these players. Sayonara Mining, of course, such a small cap there. It was down, well, I mean, you look at the cent thing, how do you down 2.4% off 0 cents, but of course a small move in a small cap movement there, 2.4%. Telix Pharmaceuticals is an interesting one. We were talking about how many sort of broker upgrade recommendations it received after its results. No real news on that one, but what are you looking at
Fletcher did go ex-div, so that's part of the explanation there, because once again, that's one of those sectors that are surprised too. We're seeing that with James Hardie, particularly with its business in the States, proved to be very resilient, made some sort of a comeback there too. So more broadly in the building space, which, Juliet, I did find surprising, because once again, it's that story about what we're spending our money on.
Yeah.
Which, I mean, that is a discretionary sort of spending, isn't it? Particularly if you're choosing to build or particularly renovate a home.
Yes, absolutely.
It's not a great time you would have thought to be doing that right now.
No, and you saw that reflected in some of the front running from the likes of Bunnings as well. All right, let's have a quick look at the small cap leaders and laggards as well. Brockman Mining up by almost 21%, Alligator Energy up 14%, Archer Materials was up by 12%. And of course, in terms of what we are looking forward to, these are some of the laggards too. Empire Energy down 7%, Metro Mining was down by 6.4% in the small cap space. It is about the ECB, Andrew.
Yeah, very much so. Once again, some seeing this as a 50-50 decision. Expectation, I think, on the whole, that they will lift rates again by 25 basis points. But you only have to look at the recent data out of the Eurozone at the moment to see the weakness that is there. Case in point being Germany, now being referred to as the sick man of Europe.
Yeah.
Gee whiz, if Germany's struggling there, you can only expect the others are going to follow suit there. And a lot of that, of course, is also tied to what we're seeing in China because of the strong trade links there, particularly between Germany and China. So Germany's struggling to sell its exports into China at the moment, and that's proving to be a drag. So it's going to be fascinating to see how the ECB frames this.
Yeah, indeed. We are going to see as well some clear movement in terms of what you see with the Euro US as well, if there is some bearish developments ahead of that meeting, and some movement too in terms of just reading what Awanda had said, that a rotation could be interesting in the pound versus the dollar if we see that sell-off signal since July. That's been a bullish retracement when you look at what the ECB is doing in terms of also the moves from the Bank of England. The US producer prices, US retail sales also coming through, and US jobless claims, those weekly numbers.
Yeah, retail sales will be interesting out of the States. So once again, it goes back to that question of consumers, just how well they're holding up at the moment. Jobless claims, they have once again proved resilient. So that is a weekly read. Be interesting to see how that pans out and whether we're seeing any further signs of weakness in the tight US jobs market. Let's move to what's ahead for us tomorrow. Well, we've got those ASX index changes.
So that's quite interesting. Of course, the China data dump is always one to watch too, and will show us a little bit of a move into how the overall Chinese economy is faring and whether or not more stimulus change are needed. But in terms of this movement for the ASX 200, it is that time of year where we see a rebalancing of the S&P ASX 200, and there are going to be 6 stocks kicked out and of course some coming in. So Data 3 is coming in, Genesis Minerals, which is a gold stock, is coming in, and also the meme stock Weebit Nano coming in, and amongst those being kicked out here are some of the other stocks that we've been keeping an eye on.
Yep, it's Abacus Group, Abacus Storage, Imugene, Lake Resources, and Sire Resources, which has been in the news a lot, and it has been suffering, certainly in terms of the share price. So as a result, it's out.
Yeah, and actually interesting, sorry, I said 6 are leaving and 5, I did say 6 are coming into, but actually 5 are only entering because we've actually had 201 shares in the ASX 200 since Abacus Group spun off its Storage King business. So 6 out, 5 in. That's a pretty tough, it's a bit like Love Island, isn't it?
Yeah, it's harsh, it's brutal, but it's real. Well, we should have been referring to it as the ASX 201, shouldn't we, really?
Yes, indeed.
Yeah.
You have been chosen. All right. That is it for us. We will be back, of course, tomorrow, and you can catch up on all of the content on our platform, ausbiz.com.au, or, of course, listen to our podcast as well.
Yeah, in the meantime, have a great evening. We'll do it all again tomorrow. See you then.
See you then.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.